Hooty hoo, all my stock market gamblers. Welcome today. It's Wednesday. We got the Fed day. The Fed's going to come out with their announcement today. So what's happening before the Fed announces? Well, the Nasdaq's up about 300. Dow's up about 100. Stock market is in rally mode. Will the Fed change the rally? Will they continue the rally? Well, we don't know, but we do know that the Fed's going to raise basically 75 basis points. Now, what we got still going on is a little tug of war between the bulls and the bears. Right at the 50-day moving average, the S&P came down, touched the 50-day, bounced up nicely today. Now, will it continue to bounce? I actually hope that it will. I hope that it will continue to bounce. I do have a small short position on, but I think the Fed announcement, maybe we get the continuation of the bounce and maybe I add to my short position. I do think we're going to pull back and come down to the 200-week moving averages on the SPY. That's just my opinion. Now, I got some funny stuff going on. To me, this is funny. Maybe you'll find humor in it. Well, right now, we're going to get an announcement. I guess it's Thursday they come out with it, maybe of the second quarter GDP number. Now, if that's negative, technically, we've got 2 quarters of negative GDP, which would put us into a recession. But you gotta love the narrative coming out of the White House. Well, that's not a recession. It's not a recession anymore. Just ask the Federal Reserve. They'll tell you 2 quarters of negative GDP doesn't constitute a recession anymore. We can't have a recession. The unemployment rate's too low. I don't know how. It doesn't matter if they change the definition or not. I believe we're already in a recession. But here's the thing. A lot of people think that a recession is bad, and it is bad for a lot of people, especially if you're one of the people that loses their job. It's bad. But for the overall economy, the macro picture, if you will, we need recessions. Recessions flush out bad businesses. They flush out the malinvestment. A recession is actually a good thing. Now, depression, that gets a little bad. But you're going to have a Great Depression if you don't get some recessions along the way. A recession is good. Now, right now, 40% of the companies in the S&P 500, they don't make enough money to even pay their debt. These businesses, most of them should not actually be in business. You have to flush out bad investments so that the investment money can go to the good businesses. The bad businesses have to die off, and the good businesses will continue to get stronger. That's what happens in a free market, but we're not in a free market, and nobody wants a recession, especially with an election coming up. You got the midterm election, so they're going to change the definition of recession. Now, I just find that very fascinating. Now, what else is going on today? Well, let's move over to the real estate market. Now, I think housing is in big trouble. Now, a lot of people disagree with that. Now, just in my area, the June numbers came out, and our sales are off 40% from a year ago. 40% in San Jose, the number of sales is down 40%. But everybody says, yeah, but Mike, the prices are still high. They're not coming down. I guarantee you continue to have 40% reduction in the number of sales with inventory going up. Prices are soon going to follow. Now, a lot of people say that prices can't come down. Those realtors, well, people always need a good place to live. They're not going to sell their principal residence. They're locked in at 3%, Mike. There's going to be no crash in the housing market. Well, and that's their opinion. They're entitled to that. Now, I have a different opinion. I think housing is in big trouble. Now, why do I think this? Well, basically, I think this because of several reasons. Inventory is already starting to increase, but where's more inventory coming from? I think we have a big problem. Right now, 1.7 million people are not paying their mortgages. They're just not paying. Now, I'm not saying that's a huge problem. That's, it's typically normal. 1 to 2% of houses aren't making the payments on their mortgages. All right, so these houses are going to go into foreclosure, and they'll come as inventory onto the marketplace. But what else? Well, these forbearance loans. You see, we've lived in a very, precarious time, let's say. Right now, we're not allowed to foreclose on people. We're starting to be allowed to foreclose on people, and we're starting to be allowed to kick people out for not paying their rent. But for the last couple of years, people have been allowed to live in their homes, and they didn't have to pay their rent. They didn't have to pay their mortgages. That's really a strange thing to me. I've never even heard of such a thing until the last couple of years. We've never seen that throughout the course of history. But this is all new now, right? But anyways, we got 5 million people still on a forbearance program. Now, a forbearance program means that the bank, hey, we don't want to take the property back, so you just don't have to pay for a couple years, and we'll catch up down the road. We'll tack it onto your mortgage at the end. And that's true. They do tack it onto the mortgage, and maybe they even give you another loan to tack that onto your mortgage with. Now, that's kind of funny. A lot of people, you hear these stories of people that, they went into a forbearance program on their rental house. So they had a rental house, and they go, hey, we can't pay. But what was funny? The tenant was still paying them, right? So the tenant's paying them. They're not paying the bank. And all of a sudden, the bank catches wind of this, and they're going, well, hey, we're going to put this house into foreclosure. So they send a notice to the house that you're being foreclosed on. Now, the tenant, he's been paying his rent. He's one of the good tenants. But all of a sudden, he's going to get kicked out because the bank is foreclosing on the house that was in forbearance. Oh, it's just funny. You can't make this stuff up. So we're in some very strange times. And that's perfectly fine. So we got 1.7 million people not paying outright. We got another 5 million people in forbearance programs that aren't paying. And that's not where the problem is. I think that's perfectly fine, perfectly normal, right? Well, for the times, it might be normal. Okay, but where's the big trouble coming from? Well, I think the trouble's coming from this recession, right? So people, their savings has been depleted, right? Their savings is being depleted. But the debt is continuing to increase more and more at a record. Every month, consumer debt has increased. It's at a record high. And they're getting their cars repoed. During the pandemic, let's say you went out and bought a $50,000 car, but during the pandemic, there was $20,000, $30,000 premium. So you might have an $80,000 car payment loan to pay off. Now, you got to pay $1,500 a month. You don't have the money, so your car's getting repoed. Gas prices skyrocketing. Food prices have skyrocketing. A lot of people are living paycheck to paycheck, right? So a lot of problems. These are going to be things that come into play. And when they can't make their payments, now, let me think. Do they put gas in their car and buy food, or do they pay their mortgage? A lot of people are going to choose to put gas in their car and pay food, and they're not going to pay their mortgage. So this is going to be more and more people going into foreclosure. Now, what else is going to put them in foreclosure? Well, it's going to be this thing called a recession. Now, of course, we're not in a recession, though they just changed the definition of a recession. But when you go into a recession, here's what happens. You lose jobs. You lose a lot of jobs. Now, right now, jobs are plentiful. We can't get people to go back to work. Mark my words, this time next year, we'll be talking about there's no jobs. There's no jobs, and a lot of people are going to be laid off because of the recession. It's just how it works. When there's a recession, you lose your job. What happens when you lose your job? Let me think. Well, you stop paying your mortgage. Well, you don't have the money to pay your mortgage. A lot of people live paycheck to paycheck, and people will tell me, they always say, but Mike, it's different this time. Well, there's no inventory out there, so prices won't come down. They say, but Mike, it's different this time. Everybody's got equity in their house, and that's true. A lot of people have a lot of equity in their house right now, but that equity can vanish overnight when prices start to drop. The equity goes away, and a lot of people that bought in the last 3 months, I'm telling you, they're already underwater. They may have put $200,000-$300,000 down, and that's been already wiped out. Their equity has already been wiped out, and they're underwater already. But when those people that bought 2 years ago, they got a lot of equity, but that equity can go away. I'm telling you, when the bubble pops, all that equity just vanishes into money heaven. The money goes away. Yeah, you had equity. Now you don't. Now you're underwater. Now you're giving the house back to the bank. Well, it's a death spiral. It really is. And that's what happens. But a lot of people say, but Mike, it's different this time. They're coming out with the 40-year loan. People are going to refinance. They're going to get a 40 40-year loan and everything's going to be okay. And that could be true for some people. If you want to be a slave for 40 years, that's the new thing. That's what they want. They want you to have 40-year loans, 50-year loans. They don't ever want you to pay off your house. They want to make you a slave to that house to pay the bank. It used to be the American dream. It's not a dream anymore. It's a nightmare at these prices. I'm telling you, these prices are going to revert back to the mean. It always happens that way. Right now, we're way above the mean. If we come down, 40, 50%, we'll be about at the mean. And that's just where normal is. Look, at people think we can't come down 40 or 50%. Look, in the last 2 years, we ran up 20% a year. 20% and 20% equals 40%. You're actually telling me that we cannot go back 2 years? It's not possible? I got news for you. We can go back a lot farther than that. I've seen it. I'm an old guy. I've seen this movie before. It's not going to end well. It's not going to end well for a lot of people. Hopefully you're not one of those people. Hopefully I've warned you. Hopefully you know what's coming. Just don't talk to people about this because you'll lose a lot of friends. That's how it works. But anyways, if you like this rant, give me the thumbs up today. We'll see what the Federal Reserve does. Raising that interest rates, will that make the market tank or will it make it explode higher? Exciting times we live in. I love this stuff. If you like this stuff, also give me a thumbs up. If you really like it, hit the subscribe button so we can talk again real soon. Get out there. It's Wednesday. Everybody have a great day. Bye-bye now.